Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and I know it's been a week or so since I've uploaded, so this is the first time you guys have got to hear my beautiful voice. I know I took about a week off. I want to let you guys know that right now things are really hectic, and one of the main reasons why I've been a little bit hesitant to post videos is because I'm currently in the process of getting the rest of my securities licenses. Right now, I do have my Oklahoma life and health insurance license. I have passed my SIE, and I'm also in the process of getting my Series 6 and 63, and I should be taking that Series 6 test pretty soon, probably within the next month or so. But anyways, that's what I've been busy with on top of my full-time job and being in college and obviously making YouTube videos, of course. But what I wanted to make a video about today was media, because lately we've had so much news in regards to media. Now, with my portfolio, I'm not very media focused. There's not a whole lot of media involved with my companies that I own. But one thing that is really interesting is that three huge things have happened in terms of the worlds of media regarding Netflix and Amazon Prime and Hulu and HBO Max, and even a few that we're about to get with, which involves Google, i.e. YouTube, and AT&T, the merger deal with Discovery, and also Amazon buying out MGM. All three of these are going to be big, mainly focusing on Google today, because if we look at all the big tech giants, okay, if we look at a lot of them, even like the number one company in the world, a company like Apple, year to date, over the last 6 months, this company is actually down in share price since the start of the year. So a company like Apple, which is awesome, which is incredible, a Goliath of a company, it is actually down for the year. And a lot of other companies that are giant as well in the space just are not having great performance right now. But there is one exception to that. Looking at the last 6 months of Google since the start of the year, this company has had the complete opposite, an uproar in share price, well outpacing any previous all-time highs that it had in the past. Just before the pandemic, at peak prices, it was a $1,500 stock, and now just a little over a year later, throughout the pandemic and all the challenges that it faces, this company now sits at $2,400 plus a share, including another small green day today. But I want to talk about, in this video, why YouTube specifically is going to be an incredible business that is going to continue to take Google to the next level. As if this company already wasn't incredible enough, it already isn't just such a powerful business that is likely not going to be taken down for decades. YouTube is just going to be one more incredible business, one more incredible asset that Google has in its portfolio of businesses that is going to continue to grow the company at rapid paces. But thank you guys for tuning in. If you haven't seen me before, my name is Jordan. I'm a millennial investor. The companies that I own are listed in column A right here, sorted from highest paying to lowest paying. The very next video here in the next couple of days will be an update on this. So this is actually not updated, so stay tuned for the next video. Right now we currently have $409 worth of annual dividend income. Once again, we'll be beating that record in next video. And I also track my annual and monthly dividend income as well on top of my portfolio value and my monthly YouTube income. My 5 investing goals for 2021 are listed right here, and this is my 2021 stock market prediction. And number 4 out of the 5 goals for 2021 is to hit 150 referrals to M1 Finance. Well, luckily we did hit another referral here today. We now have 112 referrals. At 30 bucks a pop right now, you can get a huge incentive just for getting signed up. Every time you use this link down below in the description, you sign up with the link, you deposit $100, you get $30. So if you're watching this video right now, even if you have no intention of using M1 Finance, even if you have no intention of investing, even if you just really just want $30, there's a link right there. Absolutely no risk, no free trial with some sort of sign up later. You literally download it, deposit it, free 30 bucks, and more importantly, you'd help be supporting me and the channel. And not only that, going a step further, there's also other things in the description as well. So if you're interested in things like mentoring calls, if you want to contact me through email or phone call, and you want to help get signed up with M1 Finance, and you need help getting started with your investments, I can help direct you and guide you throughout that journey. And if you want to check down below, there's other things as well, including auto savings accounts, credit card referrals, and other things like that. But thank you guys for tuning in, and let's go ahead and get started with the first piece of news, Amazon. Amazon to buy out MGM Studios for $8.45 billion. Now, what I think is really interesting is that MGM is kind of an old school media company. They have a lot of old school cash flowing franchises, with the biggest one being 007 and Legally Blonde and some other big names like that. But what's really interesting about this is not the money that Amazon is going to make. It is going to continue to be the exclusive content that is going to be on Amazon Plus. What is the main reason why Netflix, oh, which by the way, earlier we were talking about tech giants really struggling so far throughout the first 5 or 6 months of 2021. And Netflix is another example that since the start of the year is once again down in share price. But Netflix is a great example of a company that has really shined, that has really had an incredible example of a company that has a competitive edge in the market. It has mass media and it has so much exclusive content that other competitors in the streaming space really find a hard time to compete. Unless you're a specialty in your field, unless you're some real competition like a Disney Plus, then you really have a hard time competing with Disney. And this is the move that Amazon is trying to make. They're trying to get more exclusive content to where now a great franchise like the 007 franchise can no longer be leveraged by someone like a Netflix. So if Amazon spends this money now, it will not only make them money long term, but more importantly, will have those awesome exclusivity rights for great franchises like a 007. Now, if you look here, this little snapshot, it shows Amazon biggest acquisitions by deal size, including Twitch for almost $1 billion. We have PillPack for $1 billion. We have Zappos.com for $1.2 billion. Ring, which I think is a very, very good one for Amazon, $1.2 billion. And then the second largest ever was this one, MGM Studios, $8.45 billion. And then, of course, the acquisition of Whole Foods a couple years ago for $13.7 billion. This is the second biggest deal ever done by Amazon, and I think it's just one more thing that will make this company continue to dominate. I mean, it's hard to think of a scenario where 10 years from now, Amazon is A, not a bigger company, B, wouldn't have been a good investment, and C, it just continues to not be the number one player in e-commerce. And while this might be a main focus with an e-commerce business, they're focused on so many different businesses, and especially in the streaming space, and I think this is a great deal for Amazon. Now, not only did this happen recently, just about a week or so ago, with Amazon announcing to buy MGM, but if we close out of this tab and go to the next piece of news, we have an important piece of news for dividend investors. My whole YouTube channel is focused around dividend and dividend growth investing, and many people were devastated by this news. And that's what this big 2 or 3 day drop is here, from where this company was $32 a share and dropped down to roughly about 28. Now, for a company like AT&T, that is arguably one of the slowest, most boring stocks in the stock market. I mean, this company never even has hardly a 1% up or down day. It's always fractions of a percent. It usually moves by pennies by the day, okay? You just see how boring this chart is over the last year. Trading in a range usually between like $28 to $32 a share. Very boring, non-volatile stock, okay? But this company really had a big drop off when they announced that they would be merging their Warner Media business with Discovery. Now, Discovery has had a big hit recently with the recent announcement of Archipelagos Capital, if I pronounced that correctly, having margin calls and potentially even going bankrupt. And I don't really know a whole lot about what happened there, but anyways, this company has went from about $80 a share all the way down to $32. But more importantly, Discovery owns many, many different big network brands, a lot that you've probably known and seen every single day. And AT&T has had a poor time managing its media business. With HBO Max and other things as well, this company continues to make poor management decisions. Now, this company is going to have a $43 billion deal when they merge these two. And AT&T will be acquiring 71% of the business, and Discovery will be acquiring 29% of the business. Now, the new company, which is yet to be announced the name that it will be spun off into a new company. So AT&T shareholders will have part of their ownership spun off into a new stock that is currently unnamed. Now, as that happens, that new company will now have $43 billion worth of debt. And this company, while it may be a high cash flowing business, it is not one that I would currently be interested in investing in. And more importantly, not only is this having a lot of unanswered questions with a company that has no name, and really no outline is really made yet for what the streaming business is really going to do to set itself apart from a Netflix or Amazon Plus or Disney Plus or really any other big name out there. More importantly, the main reason why someone wants to own AT&T for a boring stock price and one that's even declined over the last 5 years through poor investments and mergers, this company is announcing that it's going to be cutting the cash flow of its dividend by roughly 50%. So if you're getting a dividend yield of 7 or 8% today on AT&T, that's going to be half. So right now it has about a 7% dividend yield roughly. If you're investing in it today, next year when this deal is finally finalized, instead of 7%, you're going to be getting about 3.5%, which I know many investors own this company strictly because of the dividend yield. So if that's the case, sorry, you're not going to be getting that anymore. So AT&T, this is one that I did own for a very short period of time. I did sell out of it, and I honestly did get tempted by that high yield. And thank gosh I sold out of it before this deal was announced. And honestly, the share price is almost the exact same price where I sold it at. I believe I sold it a little over $28 a share, and today it trades at $29. So really nowhere. And the money that I did put towards other companies had gone significantly higher and even raised their dividends. So a company like AT&T is not one that I'd recommend investing in, especially now that the dividend is cut. It's not to say that it's going to be a failure. I just think that there's better places to put your money. And then last but not least, the main focus of this video I wanted to talk about was Google. Google is one that I really think is kind of a hidden gem, and it is really starting to get on the forefront of how successful YouTube is going to be for this company. Now, in the same way that we were talking about streaming, we were talking about Netflix, and we were talking about Amazon Plus and HBO Max and all these different competitors. The one thing that really sets YouTube apart is obviously, including me, it is creator built content. It is not any type of heavy induced, heavy capitalized. It is not the type of content that Netflix produces where they have to spend billions of dollars a year to go out and have high budget films, pay high paid actors. The creators themselves create the content. Now, sure, we obviously get a piece of that ad revenue, but YouTube has to spend basically zero on producing new content for YouTube. Like, basically nothing. And so if you're a Netflix or a HBO Max or whatever, you're going to continue to have to spend so much of your bottom line to the point where you're probably unprofitable or just spending ridiculous amounts until one day you can hopefully start to produce some realistic cash flows. That is not the case for YouTube. Because they spend almost nothing on creating content, they let the creators create them for them, including me right now as you're watching this video. And I just really think that it's an opportunity to make Google have its own Netflix inside of the company, if that makes sense. In the same way that Google has transitioned its old boring search engine business into what has been a Goliath of a tech company today, I think the same thing is going to happen with YouTube. If you're investing in Netflix today, while I think it's an incredible company and will probably be very successful over the next decade, I think that if you're investing in Google, I think it's almost like investing in your own Netflix inside of Google, which I think is obviously right now a fraction of their Goliath search engine business and advertising business. But I think that there's just going to be another exciting piece of news and another awesome opportunity for investing inside of Google. And if there's anything to support my argument for why I think YouTube could be successful, I have two reasons. There's first off, you see the title of this. YouTube is a media juggernaut that could soon equal Netflix in revenue, already competing with Netflix, the #1 contender in the space. And like I said, no money on advertising, no money on creating new content for the company. It is all self-made. It is all self-run. It is all done pretty much flawlessly by Google. And the second point that I would have is that if you don't believe me, what are you watching this video on right now? You're watching on YouTube. So thank you guys so much for watching. I really appreciate it. I thought it would be kind of a fun, interesting video to get a different take, just to focus on all the different news that have happened with media recently. But like I said, if you want to get signed up, 112 referrals. Let's go ahead and get that number higher. But thank you guys so much for watching, and I'll catch you guys next time.